Welcome everyone to, the upteenth event in our series of free webinars. When I last looked, we had about 320 people booked, so thank you so much for your interest and participation today. You may be used to using Zoom, but you're more likely to have used Zoom in meetings mode. Today's webinar is in webinar mode, unsurprisingly. Now, what that means is that we can't see your screen. You're completely anonymous. So if you have anything to say, please use the chat facility or the Q&A. We do encourage you to ask questions, but for time purposes, we will deal with the questions at the end. And if we don't have enough time to answer your questions, we'll do so afterwards. And we'll send those to you along with the slides. The most commonly asked question is, can you give us the slides? The answer is absolutely yes. And we'll also give you a link to the recording. So today we're covering the role of the COFA, and I'm absolutely delighted that Sarah Charlton is today's speaker. What Sarah doesn't know about the COFA role is really not worth knowing. Now, as you may have heard Sarah mention, she's an accountant. She's worked with a number of legal regulators, professional bodies and government organisations. She has been chair of the Institute of Legal and Financial Management, and she continues to serve on their executive council. She's won numerous awards, and perhaps not massively interesting to many people, but she's had a book published on VAT, would you believe? She's a real expert in that. So is Darren Whelan, so is Linda Lambert, who are watching this afternoon. But what is truly interesting about Sarah is that she was an Army reservist, having served overseas. She has served in Bosnia, in Iraq, where her financial management experience was utilised by the coalition. She dealt with local ministers abroad to assist and oversee budgets for all local provinces within the southern region of Iraq, and not many of us can say that. She does, rather bizarrely, have a nickname which she can explain if she wants to. I've never asked her this question before, but her nickname, I understand, is Mary Poppins. So I'll invite Sarah to comment on that in just a few moments. Now, I think just before I hand over to Sarah, you should be able to see a poll in front of you. I can see that 170 people have voted already. So that's the majority that are on the webinar just now. There are others that haven't voted. It's just interesting for us to see who you are, and I know Sarah will comment on that in just a few moments' time. So I'm going to hand over to Sarah. I will come back on the screen at the end when it comes to the questions. So Sarah Charlton, over to you.
Thank you very much, David. And oh gosh, that's a blast from the past. I have helped a number of people through my career, and many have referred to me, yes, as the Mary Poppins, because I go in, help and fix things, and then go, once it's all sorted, go on to something else. So that's been very kind from some of the people that have I've worked with. So I'll end the poll and share the results with you, just so you can have a look. The majority of the people that are on the call today are solicitors that are regulated by the SRA, but you'll know that we have a handful here that are accountants or cashiers, and we obviously have a couple that do prefer non-compliance and not non-compliance, some reality television. So I shall stop the results. I will dip in and out of the chat room to be able to answer any questions, so feel free to use the chat room at any point. There are a couple of slides where I'm not going to read the slides out to you. I'm going to allow you to digest the contents of the slide, and I will use that opportunity to be able to answer any questions that you might have. I did mention to David a little story when I first started as chair at the ILFM. And attending an event, I hadn't realised how much rapport there was between accountants and solicitors until I attended the Law Society event. And there were many accountant jokes, some of which were particularly humorous. So I thought I'd start off with a little bit of humour. So we are going to have a look at the 6 particular sections today that David's asked me to cover off. And we're going to focus on the practical aspect of the role and not the theory. So the ILFM offer a great online course if you do want to know more about the role and responsibilities of the COFA. And if you want any bespoke advice, then feel free to contact me to discuss your requirements. I am banking on some audience participation, and some people have raised a hand, which has been lovely to have a little bit of interaction. For anyone who has spoken at an event, they will sympathise with the difficulties and challenges that you have when you're just staring at a blank screen rather than being able to sort of see people's faces and people's reactions and have that rapport. Yes, you can use this as ACCA CPD points. We've had our first question. So I have managed to juggle some homeschooling this week, and therefore I've only unfortunately managed about 6 or 7 slides. And you'll be pleased to know that 3 of these slides are to do with the history of the Romans. I was thinking about doing a 3-hour test at the end, but I felt that maybe in line of the current situation, perhaps it'll just be a tutor's view in relation to your grading. I've also learned a little bit more about the Welsh language. For those of you who know me well will know that I live in Wales and I was born in Wales, although I did live a significant part of my life in England, so Bore da. Feel free to post any questions into the chat room, as with me only actually managing to produce 6 slides, I think we've got a good 40 minutes to kill at the end of the 6 slides that I have for you. So I thought I would place my experience into 3 broad categories. We've got the good, the bad, and the ugly. The good, these firms have easy to read policies which are bespoke to the firm and supported by processes. They also provide good quality and regular training. We have the bad, so policies are adequate to be able to tick a box, but often contain obsolete information and not supported by processes. We also have the ugly. These can often be poorly written in a language that their staff are unable to understand or follow, and they were put in years ago. Some of them still actually refer to the 1998 Solicitors Accounts Rules. I know that a lot of finance compliance trainers refer to SARS, Solicitors Accounts Rules. It is a little bit of a pet hate of mine for those of you, those people who've worked with me. Accounts rules are by different regulators, and therefore if you are regulated by the SRA, then it's the SRA Accounts Rules, and if you're regulated by CLC or SILEX, it's SILEX Accounts Rules, CLC Accounts Rules. So that's my little bugbear, is outdated accounts rules reference. Of course, there is the really ugly, where there's absolutely nothing, and that poses a number of problems which we will look at a little bit later through some of the slides. There are lots and lots of benefits of having good policies and procedures, to name but a few. It provides a clear message to staff on what is acceptable in your firm and what is not acceptable in your firm. It can help shape your culture to move away from the historic poor practices, as it provides you with a line in the sand. And it shows your regulator how serious and risk adverse you can be. So there's lots of positives. I do get asked quite a bit, where do I start? So the first part of the process is to ensure that your staff have the necessary tools to be compliant. If they don't have the tools, then it's particularly difficult either to expect them to be compliant or for them to actually put it in practice. And in the absence of any policies or procedures, then you are encouraging staff to follow existing culture, which is great if that's one of strong compliance. However, it also provides them with the option of making their own choices. And as we know in life, everyone, has that choice to be able to make good choices and bad choices. Policies can support the knowledge that is needed and detail the behavior that you expect. Procedures can often support the skill that you should be applying. So this particular slide merely shows a brief list of how some policies and procedures can be intertwined. So if we take the cash policy as an example, let's assume your policy states that you accept up to, £500 in cash. However, I also need to know more about the process and procedures around this if I'm an employee, and especially if I've just started. Can anyone accept it? Do I have to do any money laundering checks first? If I'm a fee earner, should I ask a member of the accounts department to accompany me? Should I offer a receipt? Is there a different banking process to cash than there is for checks? How long can I hold on to it? Can I leave it with someone else? Can I keep some of it to offset expenses that I've incurred on that particular file? Do I need to log it anywhere? What if it requires safe storage? Who has the key? Is there a safe? Is there a locked cabinet? Who needs to know that I've left the cash in the safe? Can I take it home? Can I make up my own choices if there isn't anything documented? So there's lots of questions if I was an employee. And I appreciate you can't be expected to provide an exhaustive list of all eventualities. However, you can look at financial compliance in a more holistic view and encourage staff to follow the spirit of your policies. So that's something to think about. So everyone in your team should have sufficient compliance knowledge to be able to adequately discharge their responsibilities aligned with their job role. We all know that. How do you achieve that when your compliance manual is already 365 pages and you haven't even put anything in to do with financial compliance, or you've only put a few pages in? You should also consider everyone has a different style to learning, and really good financial compliance considers this. Your initial step would be to consider who your target audience is. Generally speaking, you'll have new starters who have never worked in a law firm before. It's great. At least you're starting with a clean sheet and they don't have any bad habits. We also have new starters who have assumed compliance knowledge. And that's maybe because they've worked in a law firm before for a number of years. And you can carry out interview assessments to find out what sort of level that candidate may be joining your firm and what sort of financial compliance knowledge they have. You can fill any gaps with maybe induction training and identifying some other external training providers. We also then have existing employees, and I've put them into two pots. And the reason why I've put them into two pots is, in my experience, you get existing staff who are really proactive, they recognize the necessity, and they just get on with it. They know that they need to complete the training, and they know that they have to be able to absorb the information that you're trying to provide them so that they can continue to practice, and them as an individual as well as the firm aren't put at risk. Then you have existing staff who are going to resist. And it could be the fear of failure. Perhaps they're too important. Perhaps they're your peers. Perhaps they're your supervisor. Or they're too busy. Or it's just simply complacency on their part because they did it 10 years ago and they know an awful lot. Let's be honest, who really wants to sit through an hour's financial compliance session? Yet here you all are. Hope there's some thumbs up I'm seeing there. So, how can you communicate financial compliance information? Financial compliance can often feel like a roller coaster ride. Nobody really wants to go on it. You have spent money or time in return to embarking on the journey, and there is a sense of nausea in the early stages. However, once you have completed this ride, you feel a sense of pride and accomplishment. So that's a good analogy for financial compliance training. When I originally read my slide out to my 11-year-old daughter, she advised me that I sounded more like an air hostess. So hopefully I managed to convey that in an engaging way. So there are lots of mechanisms that you can use to communicate processes or procedures and often accommodate all styles of learning. You can filter this into day-to-day business by using workflows. You can provide workflows either through software houses that have a number of workflows attached to their finance software, or it might be a case that you'll just be able to build a very simple, straightforward workflow. There's lots of information that can be delivered through the intranet, artificial intelligence. You see lots of questions being posed and bespoke answers. Maybe who do I need to give the cash to? Is there somewhere to keep it safe? You can also use mini blogs in your internet that you can use scenarios. I like scenarios, ideally, maybe where you've had non-compliance in the business that you're currently working in at that particular time. I feel then it becomes more relevant and more poignant. You can have internal testing. You can have a short set of PowerPoint slides with just a question at the end. Or you can even lean on your finance software provider for them to be able to provide some sort of training on the project that they're providing you. In my experience, regular bite-sized information threaded through everything you do has been the most successful mechanism to disseminate financial compliance messages. That's the most success that I've ever seen in a business. So you're all going to be really, really pleased. I am going to do another quick poll. And this particular, okay, we are going to do a poll on around what do you think a month-end pack should consist of? I want you to assume that you are a medium-sized law firm. Have a look. You should be able to tick multiple questions or multiple answers, should I say, in relation to the survey. And it'll be interesting to see what people's views are around what should be included. So we've got unpresented payments and lodgements. So lodgements are cash or debit credit card payments that you've posted but haven't actually cleared through the bank. We've also got the bank account summary. We've got a trial balance that makes sure everything's dotted and crossed. We've got a suspense ledger. We've got some exception reporting. So by exception reporting, it can be identifying costs that sit in client accounts in excess of any time period. It can be a office and credit reports. It can be disbursements that have been billed and paid, but not paid by the client, but not paid out by the firm. And when we talk about cash books, we are generally talking about the electronic entries or book of accounts that record and support your bank reconciliation. You should have a number of central registers, and one of them should be a central register of client money held outside of a client account. So I anticipate the finance delegates that are on today have probably been very quick off the mark. We've had 133 out of 216 participating. So we're just going to give it a couple more minutes to run the poll. What I might do is just move on to the next slide, just so that you have a little bit of an indication as to the type of things that as a COFA you're going to be wanting to look for. And hopefully that might give you some indication. There's pretty much a landslide victory over the client bank reconciliation, and a couple of the others, perhaps maybe there's not so much of an appetite at this particular point. So you're a medium-sized law firm. So you're not particularly small, you're not particularly large. What sort of information do you think a month-end finance pack could contain? Okay, so I'm going to end the poll. If you haven't already submitted it, apologies. And I will share the results with everybody. You will see that there's very much a sort of cross-section. Depending on the size that you are, will depend on what you would have. Ideally for me, I would have a trial balance in every single month. And the reason why an office bank reconciliation is particularly useful is because quite often you'll find breaches that exist in office account where client money may have been inadvertently paid into office bank account. So it's also very, very good practice from a commercial perspective and a financial management perspective. So depending on the size and the type of work you do, there would be things that I would have every month, like I alluded to. So trial balance, suspense ledger, exception reports, cash book, probably the COFA register, but you could definitely do the COFA register quarterly. If you didn't have a lot of client transaction activity and didn't use the suspense ledger, very often, then you could definitely look to have that quarterly. But nevertheless, these are typically the types of documents that you could use to include in your month-end pack. So a trial balance, I can see why would you include a trial balance? You're about to steal my thunder, so I am going to cover off one of the benefits of a trial balance when we start to look at the bank reconciliation. So these are the sort of things that you're looking to spot, and you can see that they're particularly varied. I've got my colleague Darren Whelan, as David had alluded to. He's one of the RFM's VAT gurus, and he loves taking questions. So feel free to pick his brains in the chat room. And but you can see there's a variety of issues that if I was a COFA, or if I was responsible for the broader financial compliance in a business, these would all be the things that I would be looking out for. And whilst the SRA as a regulator does focus on the SRA accounts rules, I guess this is what really good looks like, and this is where strong compliance. So in addition to reviewing the bank rec on a monthly basis, you could look at some of this information to spot issues. And if I was the COFA, then I would also want to attend any financial management meetings. So we're going to move on to the client bank reconciliation. So some software may limit you to producing a two-way bank reconciliation. However, the accounting rules do require you to complete a three-way bank rec. So I just want to talk you through what a three-way bank rec is, because especially those that don't come from a finance background, you probably wouldn't be familiar the fact that there is actually a two-way and a three-way bank rec. So I'm just going to cover some of the basic points with it. You're going to be cross-checking three accounting points. Firstly, how much do I physically have in my bank account? And you should be able to see that by the fact that you've got physical bank statements or electronic bank statements attached to the bank, to your three-way bank rec. So that's your first check. The second check is how much does my accounting system say that I have in the electronic cash book? And that's also quite often referred to as the bank. It's the electronic version, and that should really mirror what's on what money you actually have in your physical bank statement. You also should then be checking to make sure how much money you actually have recorded on the client side of all of your client ledgers. And as Jane had queried, you may want to be able to have a look at the trial balance. And the reason why, it's not uncommon to see a discrepancy between a cash book and the client ledger balances where you've experienced an IT issue and only one part of the double entry posting has been made. This is often validated by running a trial balance to confirm this. It just provides you with that confidence that there isn't any IT glitches and the software has all, is all balanced. Running a trial balance can also assist in identifying not just the fact that you've got that problem or you've had an IT glitch and only one part of the double entry is being posted, but it can also identify further affected areas of postings, such as the purchase ledger. So if you've had an IT glitch, whilst you may have discovered it through doing your bank reconciliation process, it may actually impact other areas of your books, and you'd obviously want to know about that. It's unlikely that you're going to be able to fix this yourself, but you are more likely that you're going to have to put a request into your software provider to resolve it for you. And sometimes, depending on how complex it is, they may be able to fix it for you, and sometimes they have to put a little bit of a workaround in it for you. But they should liaise with you and give you that advice. It's a good contingency to have more than one client account, and reviewing a three-way bank rec can also identify cash book posting areas. So when I use the term cash book posting areas, what I'm saying is overall, yes, you've got £790,000 in your bank account. However, there's a mismatch between what your accounting records will say and where the funds are held and where the funds are physically actually sit. So if I had two bank accounts, say one with NatWest with £1 million in, I had one with Barclays with £2 million. So I'd have the bank statements that would tell me that I'd have £2 million in the second bank account. However, on the bank reconciliation, if I looked at the cash book balances and it didn't show me 2 million, although overall the total balances, it may be a case that inadvertently someone has chosen the incorrect bank cash book when they've actually done their client posting. So it can provide you with a few different things. As a COFA, it is imperative that you fully understand the contents of a bank reconciliation and where the information is populated from. And these were just two examples I could think of immediately if I was reviewing a bank reconciliation. The more you review the bank rec, the more experience you will gain. And you don't need to be able to do these tasks, but you do need to be able to have trust and confidence in the information that someone is providing you with. And if you don't understand the basic concepts of a three-way bank rec and where the information comes from, it makes it incredibly difficult for you to challenge the person who is actually formulating these bank reconciliations. And you have to place all your trust in someone else rather than you having that knowledge. If I was reviewing the bank reconciliation, I would also consider unpresented checks and making sure I had a strong policy so that any checks over 6 months old were cancelled. And I would also want to consider any lodgements to see what our process was and if there could be any improvements so far. One of the questions I did see in the chat is, what do I mean by a COFA register? So I generally mean some sort of breach register. And for me, sort of gold standard, it's not just recording actual breaches. I would also record in there breaches of your policies and procedures. And that's a sort of best practice. So a COFA register is not just a breach register. It may also incorporate breaches where fee earners or members of staff have done something, and whilst it's not a breach, a regulatory breach, it is a breach of your internal policies and procedures. So it's just a little bit more robust approach. So what should I expect from my cashier or accounts department? I thought this was really poignant with so many home workers, and I loved the fact that they'd actually used the iPhones. When I had it at first glance, I didn't realise they were sort of earphones. And I had a chuckle to myself, so I wanted to share that with you. So I often see a lot of assumptions made on what is expected from the cashier or your accounts team, and this can be easily rectified by the use of an effective and realistic job description, supported by regular evaluations against the expectations you have set. It is also worth noting that a non-qualified solicitor's SRA Accounts Rules Audit doesn't go hand in hand that everything is in order. However, your reporting accountant is likely to have a good idea of the overall quality of your financial compliance in the accounting department. So just to pick up a couple of specific points from that, I do see out-of-date job descriptions, or I see job descriptions that are just unrealistic. I also see situations where an individual isn't actually evaluated against that job description and encouraged to improve in areas that they're not particularly good at, or to be able to expand their compliance knowledge. I also see a lot of law firms take comfort of obviously knowing that they've had an SRA Accounts Rules Audit and feel that that's a bit of a tick box exercise, and they should take some comfort with having a non-qualified report. However, it sometimes just means that the reporting accountant hasn't asked the right questions or looked in the right places. In my experience, it's very, very difficult to do the accounts for an entire year and not make one mistake. We're only human, and for as much as you can put some automation in, you can't remove human error. So within your accounts department, you are probably going to have a number of roles, and I just wanted to be able to cover off some of the roles and be able to give you an idea of what I would expect for that particular role within an accounts department. And I also wanted to just maybe provide a little bit of context of where some of the risks could be. So you have a data processor, and they sometimes are referred to as a finance assistant, but in essence, all they're doing is inputting information that the fee earner has provided. And if that information that the fee earner has provided is inadequate or not compliant, they're still going to process, because what you're paying them to do is process that information. So it's really important, even if somebody has worked for them and processed or cashiered for a broader term, doesn't necessarily make them legal cashiers. It just means that they input data and they have worked in a law firm. So any recruitment or interview process, you do need to bottom that out. Cashier, in my eyes, is someone who knows where the data is actually going and why the data is going there. And they may have some basic understanding of the accounts rules, i.e. there's a client account, there's an office account, and client account can't be overdrawn, some of the basic rules that haven't changed over the years. A legal cashier, on the other hand, is someone who knows where the data should go and why, and specifically for a law firm. They understand the technical aspect of the rules. They're going to be able to identify to you something that doesn't sit right with them, that doesn't look in keeping with that particular type of transaction. And typically they can often help you with your regulatory obligations around acting as a bank. An accounts manager, obviously they are likely to be supervising or managing people, but this is more someone who can actually identify a breach, maybe quote the rule or regulation. They can recommend improvements to your policies and processes. They're capable of documenting the chain of events that has led to the breach and investigate it. They can often provide advice and guidance around the seriousness as well. Historically, we used to use materiality, and now the SRA have moved more to deeming something serious. You've obviously got the COFA or the deputy COFA, and the responsibility ultimately rests with them. And it's good practice to have a deputy for succession planning, if nothing else. And when we start to look at recruitment, you will see it's extremely difficult to be able to recruit in this particular area. So I've provided you with a snapshot of some of the accounting tasks that are typically covered by your cashier or accounts department. There will naturally be some risks where the COFA is also the cashier, as independence and segregation of duties would be a challenge. Not everyone's going to report themselves to their employer. On the other hand, some COFAs are far too removed from the day-to-day tasks that create risk of non-compliance, so they have to rely on their team. There is always a risk that any rounded financial compliance knowledge is limited to the COFA and not to the rest of the team, despite the COFA relying on them to identify and escalate issues. As the saying goes, you don't know what you don't know, so it can be incredibly difficult. So this is just a snapshot. It's not an exhaustive list, but you can obviously use this when we start to look at job descriptions for people within your accounts department. Great, everyone doing well. Everyone's still on the roller coaster. So my colleague and I are launching a business during the coming weeks, and we hope to bridge some of the current gap in the market, which makes it difficult, especially for sole practitioners and small to medium-sized businesses, to access affordable, credible legal finance compliance solutions. And within this new business, we plan on releasing free templates and examples to support firms who wish to navigate through the recruitment process themselves. So keep your eye out for the launch of Blue Sky Legal Finance Solutions. Any solid recruitment process should ideally consist of 2 interviewers, one who has the skill set to ask the technical questions and one who ideally has the ability to consider their fit within the business. And we will have a look at some of the key points to consider when you're going through this particular process. So you largely have 3 options available to you: employed, self-employed, and outsourcing. And these are all have pros and cons. Unfortunately, it's time is ticking, so I'm not going to be able to cover off the pros and cons. Maybe that's for another session. You have to speak to David. It's extremely difficult to recruit experienced and or qualified finance compliance staff, and therefore succession planning is more favourable wherever possible. Many firms steer away from using a recruitment agency and look to advertise themselves. And as with any skilled job, the advert is crucial and it needs to match your expectation. I regularly see legal cashier wanted, no experience necessary. And if you are being trained and developed by somebody who hasn't done cashiering or did their accounts rules training through qualifying as a solicitor 15 years ago, it's not necessarily going to be up to date. You also need to understand the different qualifications that straddle accounting and legal. So we have the Institute of Legal Finance and Management. They are the only legal accounting body that does examinations or training that sort of cover the 2 areas, and they do different qualifications. Unfortunately, there's only about, I think there's about 1,500 people who are actually qualified to diploma level, and I think there's only about 500 people that are qualified to associate level. So as you can see, it is slim pickings. You also have other accountancy qualifications. So you have AAT, and there's different levels. So you'd want to be able to have a quick look at their AAT level and maybe Google the syllabus so that you can see if that matches your job description. You also have ACCA, and we had Jane make reference to ACCA. and they're an international accountancy body, and we have ICAEW, who operate around the same level. They also have a specialist interest group for solicitors, and we have CIMA, who are chartered and management accountants. So there are different qualifications in finance. So do familiarise yourself if somebody does have a CV and provides that with you. If you are replacing a current employee, ask them to write a list of their tasks, but to identify those that are business critical. And this should then be the basis of your job description. You are unlikely to get someone who can do everything, as it is such a niche area, but you want someone who can do the important tasks, the things that are going to stop you from functioning as a business, as a law firm. I would also suggest that you look at including IT skills. So any candidate will embrace automation, and they're going to get the best out of any accounting package that you've actually purchased. Ideally a team player, so they work alongside fee earners as opposed to against them. In medium to large size businesses, I do see quite often a them and us culture against the accounts department and fee earners. So anything that you can do to bridge that communication and forge relationships so that the support teams actually work as one with the fee earners opposed to against them. You need to make some checks against any CV that's provided to you. I would write to the referees. You're likely to give them access and empower them to have responsibility for millions of pounds. You really need to do some due diligence when you're employing people in your accounts department. A question that I always ask former employers is, would you employ this person again? What I regularly see within my role at the ILFM is where there has been fraud or misappropriation and the law firm hasn't necessarily wanted to advertise that fact or has agreed a severance for that person to move on. And clearly, if they haven't actually disciplined or gone through a Section 43 notice, then it's going to be very difficult for you to ever know that that person has shown the traits of dishonesty through their career. We'll also have a look at some interview questions on the next slide. But if someone has experience, you want to evaluate this ideally through an assessment. And it doesn't just have to be accounts rules specific. It could also be some straightforward finance sort of compliance around writing a set of numbers into words. You'd be surprised how many people I've seen who can actually write a check properly. And that's being able to translate a number into words and what the current rate of VAT is. So there's lots of assessments that you can do that aren't just SRA Accounts Rules based. So now you know a lot about a three-way bank rec. One of the questions you could ask prospective candidates is, what's the difference between a two-way bank rec and a three-way bank rec? You can, if you want to test some of their VAT knowledge, you can ask a business about raising a credit note. You could also do some evaluations around disbursements and expenses. You could ask them, how do you remain up to date? If they don't have a mechanism of remaining up to date, whether that's through refresher training or membership, then that's going to be a challenge for them going forward. Can they recall the most recent changes that were to the accounts rules? I've asked this question on a number of occasions, and you'd be surprised how many people make reference to rule changes that happened back in sort of 2011. Maybe they don't even know that the SRA Accounts Rules 2019 exist. Maybe they're still on the 1998 version. So what are the current rules around residue balances? And the answer to this is there isn't a specific rule. You're expected to have a policy in place. What steps would you take if you couldn't identify a payment that was made into client accounts? So you're trying to find out, what do they know about a suspense account? What do they find, what's their view of acceptable for using a suspense account? Generally, you would only use a suspense account for a limited period of time, and ideally, not more than 30 days. And that's one of the reasons why you would include your suspense ledger in any month-end compliance pack. But you'd want to see what their perception of acceptability would be in using a suspense ledger. Can you keep client money in office account? Well, strictly under the new rules, yes, there are actually a number of occasions where you could. So you'd want to be able to see, what do they know about the current or the new rule 2.2 that does allow firms who don't have any transactional client money to be able to hold that into an office account. Are you able to give an example of something that they would view as serious? Because you want to be able to gauge, are they going to come to you every 5 minutes because they don't know and understand the rules? Do they actually know the difference between something that's minor or something that's moderate and against something that's actually serious? And I think this is a good test as well. If I was buying a property jointly with my spouse, would this have to be paid into office or client? And would your answer change if I was buying it in my own name? So under the accounts rules, if you are buying a property or have a transaction that's jointly with somebody who's not an owner, and assuming you're not a limited liability partnership, then any money needs to go into client account. If you were buying it in your own name and you're not a limited liability partnership, then that money would have to go into office account. The only exception to that is if you were receiving money like a mortgage advance or anything like that, because you're protecting the stakeholders' position, that money would go into client account. So that it's quite a technical question, but again, it starts to give you an idea of the candidates that you're looking at and which ones actually know what they're talking about and which ones are potentially blagging their way through. So one of the questions, hopefully you won't get a visit from the SRA, but I just thought I would cover some of the typical types of information that you might receive or expected to produce. You have to remember that the standard letter that's generated by the SRA when they come to visit you will be a standard letter, regardless whether you're a sole practitioner or you're a multi-million alternative business structure niche area that is based in London. You all have the same letter, and they have to use different jargon because some people might refer to books of accounts in different ways depending on what their background is. So if a software house refers to, I don't know, a client cash book in a specific way, you might find that a cashier, when they're asked for their client cash book, they may not necessarily correlate that request with the way that their software labels specific things. I know some products on the market are American, and one particular product that springs to mind, they don't refer to client account, they refer to things as trust accounts, but actually on the product itself, it actually means the same thing. So expect to write to your bank or building society to confirm the balances. You will be expected to provide open matters given the dates, and you will need client and office balances. So again, some of the software that's provided doesn't facilitate with office balances. And also if you do have somebody who's cashiering for you and you're a particularly small business, you may have Excel documents. So it's really important that you can produce these balances if the SRA were to visit you. We've talked about cash books, and there's also things called journals where you're transferring money from one type of, say, client to another client. And we have ledgers, we have client ledgers, we also have nominal ledgers. And other books of accounts can be particularly wide. They can be VAT returns, paid checks. You might have a bills delivered book if you are still doing manual books. The typical type of bank accounts will be all client accounts, trust accounts, client own accounts, office loan accounts. And if you have a third party managed account, that's probably going to be requested. So expect them to want to see everything. And if you prepare for everything, then it also sends a really strong signal that you can put your hands on things straight away. So other general documents that you might be requested would be the latest accountants report and latest set of closed accounts. And what the SRA mean by closed accounts are accounts that have been, all the adjustments have been made and they are closed. And if you're a limited company, it's likely that you will have submitted them. You don't have to be a full set of accounts, but they're going to want complete accounts. And as you'll see, there's a number of other things that they are likely to request. If you're not sure about any aspect of the additional documentation, DG Legal do provide loads and loads of advice and information in supporting you through any of those processes. One of the things that I do see a little bit more is with the new rules is that there are situations for specific types of law firms where you might not necessarily need to have an SRA Accounts Rules Audit. And even if you fall within the exemption, some businesses do decide to have an audit, or some businesses, instead of having an SRA Accounts Rules Audit, they might actually draw up what their audit is, just so that they can have some comfort that their accounts team are processing and being compliant in their particular approach. So the term AR1 is the name of the form that the reporting accountant submits. I thought it was useful to let you know that it's actually your responsibility to send that, not the reporting accountant's. The reporting accountant may send it on your behalf, but it is actually your responsibility to do it. However, you only send it if it's qualified. And what I mean by qualified is that the auditors have actually found something that is serious, and then they will qualify your report, and that qualified report has to be sent to the SRA. You can also amend an accounting period to assist with a merger, to assist with all closing periods. And generally speaking, it's usually a maximum of 18 months. So if, for instance, you haven't held any client money, perhaps maybe in the first 4 or 5 months of your trading, you may decide that you want to alter your accounting period, and that's something that you can liaise with the SRA, and they've always been quite flexible on that. So I wanted to be able to cover, if you haven't held or received client money or operated a joint account or a client's account as a signatory, then you don't need to have an audit. However, as with everything, there are always exceptions. We have to love the exceptions. So you may have held client money under Rule 2.2, and that allows a law firm that doesn't have client transactional money to be able to use their business account for money on account of costs and things like that. So you don't need to have an SRA Accounts Rules Audit under that particular rule. If all of the money that you hold is from the legal aid agency, then you don't need to have an audit. And if your average month end is £10,000 or less, and you haven't exceeded £250,000, then you don't need to have an audit. The SRA actually provide a really, really useful guide on how to calculate the average of 10,000 and what you need to look at for the 250,000. They're not expecting you to look line by line through your whole year's bank statements. So they do have a really, really useful guide that if you follow, you can easily work out whether you fall within that threshold, and therefore you do not require an SRA Accounts Rules Audit. So they are the end of my torture slides for you of financial compliance. I hope everyone's enjoyed it. We do have enough time, I believe, for some of the questions and answers. So I can see that Darren has posted some advice of when to register, so really appreciate that. Brian has asked, do you think that where feasible, the role of the COFA should not be held by the head of accounts, as they could mark their own homework and get away with fraud? It's a very, very, very interesting question, and I definitely think there has to be some consideration around segregation of duties. And I don't know if anyone noticed, I also put a relationship policy within some suggested policies, and that's where law firms have moved away from recruiting and looked for individuals to recommend people that they know, and there's potentially a relationship issue with that. With the COFA role and marking their own homework, I definitely think if you have a sole cashier and they are the COFA, there is definitely risk around independence. And as you've alluded to, whether they would actually shout out if something was going wrong. But I think that in a larger organisation, in theory, you should have robust systems and processes, so that whilst the COFA might be responsible for reporting serious breaches or have that responsibility, there should be a sense of ownership all across the business around whistleblowing. And that whistleblowing should really be compliance in the broader sense rather than just finance compliance. So they would be my views, Brian, but a very, very interesting question. So another question that I have is, if we feel we need to have an audit for the first time, what is the process? How do we start? We instruct an auditor and they just start the audit, or do we ask the SRA to inform them first? So you don't need to ask the SRA. As soon as you realise that you have been holding client money, and if you may be a case in the first few months you fall within that threshold and therefore you don't, have a look to see who the auditors are in your locality. I would definitely say that there are a number of firms that actually specialise in law firms. Hazelwoods and Crows are two that spring to mind. And if you want a really, really robust job, you really want to look at auditors that have experience in auditing a law firm, and that will give you a lot more confidence. But yeah, you don't need to ask the SRA for permission, and you can just crack on, contact an auditor, let them know when you first started holding client money, send them over your bank reconciliations, and they should guide you through whether it's better for you to actually have some sort of alteration to your opening periods. And if you do want to change the 12-month period to 18 months or something like that, especially if it's going to be cheaper to have one audit for, I don't know, 13, 14, 15 months, then it will be to have two audits, one for 12 months and one for 1 month. E&D is equality and diversity, and it's really, really important that you consider that. With another good question, what if the legal aid agency payment in office account exceeds 250,000? That's absolutely fine. The threshold, as long as it's only legal aid money that you are holding, then that's absolutely fine. It's only the holding of client money that triggers an SRA Accounts Rules Audit. I think they are all the questions. David, I don't know if you've got access to them as well to see whether I've missed any of them. I think we've got one from Claire, which maybe I haven't had a chance to answer yet. So is that residential conveyancing transactions are increasing and finding authority for signatures electronically is proving difficult. All payments from client account require 2 signatures. Many partners are finding it difficult to respond in a timely manner. That's actually an interesting point. One of the things that I would definitely look at is that the signature or the authorization of withdrawing client money, it sits in sort of almost two parts. First part, which is the internal authorization, where the fee earner or the person responsible to the file says, actually, this particular amount of money needs to be paid out. So there should be an authorization process around that. And if that's robust enough, you've also got a second authorization process, generally speaking, in accounts departments, where they will then, if you do have people who are qualified or experienced cashiers, they are actually going to sense check the request to make sure it looks in keeping. Are we acting as a bank? Do I have any concerns? And if it goes through that check, then it will then be ready to be physically released from the bank account. If it's gone through to those two checks, and those two checks and the systems and process that underline those are particularly rigorous, then I wouldn't see the need to find two people to release the physical funds from the client account. What ideally you might want is one person who inputs it, and you have somebody who's completely separate and independent who is then releasing the money. And by having that sort of setup, you're trying to reduce the chance of somebody being able to fraudulently withdraw the money. And obviously it helps reduce people, coercing into sort of influencing multiple payments out of client account. There's a word for it. My mind's gone blank. It's nearly the end of the hour.
Okay, Sarah, thanks for that. If you scroll down, do you want to just take one more question?
Absolutely.
Just pick one and we can answer the remaining questions by email.
Brilliant. So I can see there's one that says, if you do not operate a client account but take money on account of fees under Rule 2.2, does that mean you need an audit or not? No, you don't. So if you're holding client money under 2.2, the current accounts rules do allow you to have that exemption of not needing an accounts rules audit. Like I said, you may decide that you do want to have some sort of external audit, albeit limited, or to know that your processes work, but you're not required from a regulatory perspective.
Okay, great. Thank you so much, Sarah. I just want to mention a couple of things before we finish promptly at 2 o'clock. Just another free offer. Many of you will have read in Legal Futures over the last week or so, there was a lead story about the SRA now taking enforcement action against firms that aren't following the SRA transparency rules. I looked at a few websites of firms that are registered for this webinar, and I didn't find any of them to be compliant. So if you would like us to do a free check of your website, we'd be delighted to do so. It's not a big undertaking for us. It will only take us around about 15 minutes or so. So do get in touch if you'd appreciate a free check of your website. And the only other thing I wanted to mention is the next couple of free courses are crime specific. So we have a police station interviews webinar, to speak or not to speak. That is the question. That's on the 26th of January. And we also have another one, preparing to defend sexual offences, a preparation checklist. And they're being delivered by Garden Court North Chambers. So if you're a crime lawyer, please do join us for this. Finally, thank you so much for joining us over the last hour. I think it was a very informative webinar, and I hope you agree. You'll get an email, as you have, or you may have experienced, from us straight after this webinar, just asking you to rate the webinar. And if you're kind enough just to add a few words, that would be hugely appreciated. And I think we're finished at 1:59. So thank you again, and hope to see you again shortly. Good afternoon.